Welcome to the Goodman Report podcast. I'm Mark Goodman, principal of Goodman Commercial, a leading force in Vancouver's real estate market. Our firm is proud to be one of the top names in rental apartment buildings, development land, and commercial investment properties. Building on over 4 decades of commitment to advocacy and education, the Goodman Report is here to dive into the world of real estate, exploring the latest trends, market drivers, and insights. And along the way, we'll also introduce you to some of the most influential and fascinating voices shaping the industry. Let's get started. Well, I'm really excited to have Hani Lammam on the Goodman Report podcast. As Executive Vice President of Cressey Development Group, Hani is responsible for Cressey's business development activities and early project conceptualization. Since starting his real estate career in 1997, in addition to retail, office, hotel, and land developments, Hani's work has contributed to the construction of thousands of market and non-market dwelling units in the form of single-family, townhouse, and apartment projects, including condominium and rental. At present, Hani is determined on finding a path to the delivery of improved affordability in the housing sector in the face of countless obstacles and complex regulations. And finally, Hani's just a really nice guy, and I'm honored to have him on the show. Okay, well, Hani Lammam, it's great to invite you to the Goodman Report podcast. I think I've known you for about 23 years, as long as I've been in the business, or I've known of you. You have evolved to become the face of Cressey Development, one of the largest home builders, and I presumably you do a lot of commercial and retail. We're going to learn a lot about that today. But I just remember that we did a deal together probably 10 years ago on 49th and Boulevard in Kerrisdale. And I remember it was tough because I had the listing right on the corner. It used to be the old, was it a butcher shop?
That's right.
Yeah. I actually went to Maple Grove Elementary, and then that was right near McGee. So that was sort of my neighborhood, and I got that listing, which was really cool. And we sold that to another private group. It was on C2 zone land, 2.5 FSR. You were trying to buy the neighboring property, which was a co-op. Actually, the building that we sold was a co-op, and then it was converted to apartment building, and then you tied up the one next door and we assembled it.
Correct.
And, back then, selling land in C2 zoned areas was relatively easy. What you saw is what you got. And I remember actually when I sold my property, the buyer waived conditions without knowing if there was an environmental issue, and there happened to be an oil tank on the property, and it was like this massive, it looked like a submarine coming out. Fortunately, it didn't leak, but that was a really cool deal. And now when I drive by, it's so cool to drive by and go, oh, I sold that.
But that's the great thing about our industry, right? In that at the end of the day, there's something there that you can point to and say, hey, I worked on that.
Yeah. It's actually quite rewarding to drive around the city and see all the things. I'm sure, you would see a lot more, all the properties that you've built over these years. Anyways, I digress. I wanted to start off, and for the audience, just to learn a little bit about how you got into the business. Tell us about yourself. You go back to the late 90s, I think, when you started into the business, and maybe you could tell us a little about yourself and how you got to where you are today.
Yeah, well, my first exposure to the business was really when I was in high school. It was my friend's dad who was a superintendent, and him and his friend, who was also a superintendent, would hire all the kids out of high school, and we would do construction labor in the summer. I found that work extremely rewarding in that, like I said earlier, I had a hand in that project. As minor as it was at the time, it was more digging ditches than anything else, but it was, again, very rewarding. And so I continued that work all through university until I kind of did my undergrad. And then when I finished my undergrad, what was I going to do? And I did my undergrad in civil engineering. And so then I transitioned I took a master's program in construction and project management.
Were you here in Vancouver?
Yeah, at UBC.
UBC. Okay.
UBC. And while I was in that program, I managed to get my foot in the door at a smaller development company at the time called Trilogy. So I started working for them in the construction side of the industry. I was basically assisting VP construction on doing project estimating and so forth. I kind of took that opportunity, and what happened is I abandoned my studies at the time. I was like, this is the dream. This is what I wanted to do. And I, kind of jumped in with both feet. And while there, we eventually put under contract the property that is now the Opus Hotel in Yaletown.
Oh, that's cool.
And when that happened, I got kind of pulled to do some of that due diligence and early feasibility work. And that's really when I transitioned into the development side of the business. And I would say I never looked back.
And how did that evolve to working for Cressey?
So Trilogy and Cressey had a couple of joint venture projects that they did together. So I got to know the Cressey family by virtue of our interaction on those projects. Yeah, a couple of projects that were JVs. And then we finished one, and I finished Opus Hotel at that time. I had to do some soul searching as far as what I was going to do next. And I decided to call up Scott Cressey and I say, hey, you should hire me. And he did. And that was 23 years ago.
Well, that's amazing. And so Cressey is known for building a lot of condos, maybe not as well known for commercial, but could you just give us a little insight on what you've been involved in over the last 2 decades, what you're building, and maybe talk a little bit about what roles within the company you like and what you like to delegate?
Ironically, I'd never done much condo work before Cressey. So my experience was more in income producing properties like the hotels and shopping centers and mixed use projects and rental projects. So when I came to Cressey, my first condominium project was actually our Capers building at 16th and Canby, project called Olive. We did a food store in there, and that was really my first exposure to the condominium world. But I always gravitated towards that kind of revenue producing part of the business. So as I got more involved in the decision making at the company, we ended up doing a lot more of that kind of commercial project typology and a lot more rental buildings. So we look at our work today, and it's predominantly income properties with some condominium projects sprinkled in.
So in rental is the theme right now. The city's encouraging us to build rental. The province is encouraging us to build rental. And we'll get into that a little later. But when you're looking at sites, are you gravitating toward rental or are you preferring other asset classes?
I think when we look at sites, it's pretty much what is the opportunity today and its highest and best use for that property. We definitely gravitate towards building projects that we can retain. That is just something that we want to do. It's part of our long-term plan. We want to be less merchant if we can. And as long as the economics of the project allow for it, then we're going to find a way to keep it if we can.
I think that's what makes Cressey unique compared to other builders and developers in that you have a long-term goal of retaining and keeping those assets. And a lot of people don't know, but Cressey's been building strata title buildings going back years and retaining them and keeping them as rental. Are there projects where you know that you want to sell right away after completion, or do you make that decision toward the end? How are you balancing which projects you wish to keep versus, I mean, obviously, if they're condos, you're selling them off, but the other income producing properties?
Yeah, it's a function of the economic environment at the time. And the reality is it's really all about financing. If the financing is there to allow us to hang on to it without leaving too much capital behind, then we'll hang on to it. If the financing environment is not favorable, then we'll find a way to move it.
I work with a lot of developers, obviously, and there's so many different types of business models and development companies out there. And some companies are very hierarchical, where there's many different staff, different levels. You have acquisitions manager and VP and then executive VP. And then other companies are more nimble. And one of the things I've noticed dealing with you, because we've talked on the various opportunities that I've had over the years and listings where you've taken a peek at it. And one of the things that's notable is that you're on the other side and you're actually running the numbers and sending me a pro forma and making an argument, as you should, repping the buyer and acting in the best interest of Cressey. But you get down very granular and we'll talk about inputs and why this doesn't work. And you're literally, in the trenches, so to speak, with a pro forma and explaining why it does or doesn't work, which is unique because normally when you're dealing with other bigger developers, there's a junior analyst who's sort of on the other end. So I just found it interesting that not only you running the company and involved in business development, but you seem to really also gravitate toward the numbers and understand that aspect of the business. And is that something that you gravitate toward? Do you like the numbers? Every project, are you working with other staff within Cressey to bounce ideas, or are you basically taking on that role and making the decision whether it works or not?
There's no doubt that I involve my team in all of the analysis work that I do, but it is that intimate kind of knowledge, of the details, of the numbers, of the current policies that gives me the gut instinct that I have on deals. And the more removed I am from that, the more difficult it is for me to be able to respond to opportunities. So have purposefully stayed, as involved as I can in the details. And it's, maybe it's because I was not educated in this business. I learned kind of by trial and error, and staying, close to the details is really what allows me to make decisions and be nimble. Yeah, like we don't have a very big team. I have no support staff. It's literally me and myself, and I have a development team and a construction team. But from the kind of acquisition business development, there's really nobody that supports me.
I wanted to pivot to the economics and the narrative out there. There's just a lot of push and pull and challenges that we're facing. We're going through a tough time. It's been 2.5 years, I think, since interest rates started to rise. And I've been in this business for 23 years. You've been in business for a little longer. I've never seen a cycle like this. I heard about these cycles from my father, who I worked with for many years. There was blood on the streets, and, there's a bloodletting right now, all these stories of just things collapsing. And it hasn't been this horror story for, like I heard back in the 80s and 90s, but every day you read the news, another developer is losing the project, big and small. And this has been the year of court-ordered sales and receiverships. Are you seeing that this is opening up opportunities? Are you staying away because you just feel like the market hasn't bottomed out yet? Do you foresee opportunities? Are you involved in any bidding right now? Are you going to court if there's a court-ordered sale? Are you taking advantage of this opportunity right now?
No, we're not. I would say we're not jumping onto those opportunities. We look at them and we analyze them, but it's, you have to wait until the market is ready. My analysis said that there's a significant correction still to come, and there's a lot more room. But with time, folks who are controlling properties are coming to the conclusion that, hey, the market's not going to be here to save us this time. And I think it's a sign of really the real estate market that we've experienced over the past decade, in that you couldn't make a mistake. You couldn't go wrong because the market was rising and it kind of solved all the
your
problems.
mistakes.
Yeah, absolutely. It hid them all more than anything. And now that's not the case anymore. And it's not like that I'm going to say that the market's going to crash or drop, but that froth in the marketplace is gone. And my expectation is that the market will stay flat for quite some time. It's hard to look at a performance, look at numbers, and project optimistically. So the way I'm running numbers today is market is the market. It's the market that it is today. You can't build in escalation. The moment you do that, you're setting yourself up for failure.
Because if you're off on one input, whether it's interest rates or construction costs going up or rental rates going down, I mean, who would have thought rental rates have dropped more in the last few months than we've seen in a decade? Like how rapid the drop has been. RBC came out with a report. I think 2 bedrooms dropped 12 or 13%, over $400. And I knew something was up because within a 2-week span, I must have received around 10 phone calls from landlords saying, hey, is there something going on? I can't rent my suite. I use Craigslist. I use Marketplace. Is there another program I should be using? And I'm like, oh, something's happening. And then you see this report come out, and now CMHC's released the report, although there's a bit of a lag time with CMHC when they do their survey. But who would have thought? And a lot of people are opining the reasons why we have this softening in the market. I'm just curious, do you think it's because there's an increase in supply? Do you think fatigue set in and people just can't keep paying more and the economy is not doing so well? Like, what do you think the big factors are for softening rents?
And first of all, I'll say that the softening in rents is at the top end of the market. And I'm not saying that does not translate to the high end of the market. These are different things. But we push rents too far. That's the reality, is rents got pushed too far beyond what is affordable for local incomes. So that's the correction that you are seeing, because it's not like we don't have the demand. The demand is there, but the demand can't afford it, right? These folks cannot afford the pricing that is out there today. So yes, that's why you're seeing some softening in the marketplace. Obviously, there are people who are leaving this province because of affordability, because they cannot generate the incomes that they need to live here. So that's definitely the case. And, there has been some new regulations, whether it's temporary workers and so forth, and foreign students. So yes, that has relieved some of the demand. But we still have a housing shortage. So to see that rents are softening while we still have a housing shortage seems counterintuitive, but that's really just because of the affordability factor.
Yeah. And it's not surprising there'd be an adjustment because there was a rapid rise in rents over the last few years. So it's not surprising. There's a lot of adjustments happening right now when we're dealing with prospective sellers of apartment buildings who are getting close to a lease-up program, and they're asking us to evaluate the property, and they put their pro forma in front of us, and they're using a 3 cap and $6 per square foot in rents. I said, well, there's a couple inputs that are off there. And so I still think that the market is struggling to catch up with the reality of what the market is today. And there's this question that comes up quite often. And if older legacy buildings, these 56-year-old buildings are trading at a 3.25, 3.5 cap, why should a new building be over a 4 cap? Wouldn't you want to pay more? And it's because you're not having to catch up on rents. You don't have these legacy tenants, and instead of paying, $600,000 plus a door for a new building, you're paying $250 to $350 a door for an old wood frame building. But it's interesting how much misinformation there is. It's almost like we have 2 asset classes. You have the new purpose-built buildings, many of which may have some ground floor retail, and then you have the old 60-year-old wood frame. And they're 2 different types of buyers. They're priced totally differently. And there's a lot of developers who got caught projecting rents at levels that are just not sustainable today. And the banks are not underwriting the deals, and the buyers are not embracing these pro formas. And it's been going on quite some time. And I don't know if reality has set in yet with where the market is today. And it was interesting what you said. The market is the market as it is today.
It's interesting. With the new provincial regulations, the municipalities are having to, project their growth in housing supply and demand more than ever before, really, which I really like, by the way. And we meet with municipal staff all the time. And I still think that they have the blinders on in that they are approving and processing all these applications, and they think all this housing is coming. And I keep telling them, you're not seeing the big picture because you've approved all this housing, but you've also imposed all these asks on all this housing that it's not feasible to build this stuff, right? Whether it's below market rents or CACs or offsites or new DCCs and so forth, the projects just can't afford it. But the only way they can afford it is if they charge exorbitant rents. And the market is telling us that the market cannot support these rents. So I think there's definitely a reality check, on both the municipal side, the developer side.
It seems like every time a positive policy is announced, another tax or negative policy is put in, and it just wipes out the benefit. The feds removed GST on new rental buildings. Metro Vancouver immediately increased DCCs astronomically. The province mandates density near transit. Then the cities add in below market housing requirements that kill the pro forma. So, how frustrating is it for you to see this push and pull of policies at different levels and governments not working together? Like when you speak to planners or elected officials, do you get the sense they recognize there's a problem, or are they mostly just in their own world, not looking at things holistically?
It's definitely super frustrating when that happens. But I am somewhat sympathetic. Well, I don't like it, but I'm sympathetic in that, these municipalities and governments, they have cost pressures too. But I think they're looking at development to solve it all, right? Because developers don't vote. So it's easy to go after developers. The reality is these are structural issues kind of rearing their ugly heads of late because the infrastructure is crumbling. The housing is just not there to support the population. So it's easy to scapegoat the developer or the builder or the landlord. But the reality is we have policy issues that have put us in this situation. And I don't know what the solution is today because I don't know how you walk back some of these regulations.
Well, we've dug a hole so deep and it's messed up the market because of this unaffordability issue that we're having, that it's like they doubled down on these failed policies.
Yeah.
So you have, for example, a lack of supply. Tenants don't want to move. When there is movement, the rents just go through the roof because there's not enough supply. And as a result, perhaps the government will implement vacancy control to solve the problem. And now that would be the death knell of the industry. And it's this bad policy after bad policy. What's really frustrating for me as a broker, and I speak to developers all the time, they're on the front lines. And I wish our politicians could take a course on the economics, just truly sit down in a room with some of the top minds in the industry and project an Excel spreadsheet onto a screen and say, here are all the costs, here are all the inputs. You've just implemented this rule, this change, whether it's another increase in DCCs or CACs, or the timeline has increased another year because there's a bottleneck at City Hall, or you have to build 20% below market at these starting rents, whatever it is. Every time you add another input and then it spits out the NOI at the end, any minor change kills the project. Then you have things that are outside our control, like interest rates and inflation that are compounding the problem. I really wish these politicians who are in charge of policy truly understood why we can't get housing built. The biggest imposition are the taxes. The biggest reason why we can't build rental housing and we don't have an equilibrium is the leadership. And politics reigns supreme all the time. When EB was talking about implementing new programs like the Rental Protection Fund, for example, this was supposed to save tenants and help affordability. And the way he sold the program was that we must protect the tenants from, quote, international buyers and speculators. They're the problem. And it's such an old, tired narrative movie, and it's actually quite pathetic. He's doing a real disservice to the province. And you have the premier who's in charge. He was a housing minister before. He knows better. And essentially what he's done is he's pitted the very people we should be thankful for developers that have the wherewithal to withstand how long the entitlement process and getting hit with wave after wave of policy. The reality is this, 10%, and the big corporations, that's the other issue, the big corporations. When is somebody not a corporation? I mean, we're all profit driven. That's what makes the world work. So when does somebody become evil? If they're too big and too successful? I don't get it. 10% of the transactions for purpose-built multifamily year over year have been from pension funds and REITs. That's it, 10% of the market. Yet the picture that they're painting is that they're taking over the city and they're kicking people out on the street. No one is getting kicked out on the street.
Well, nothing could be further from the truth. The institutions and the big corporations, they're the stabilizing factor in the marketplace. They're the ones who are disciplined, who are, very careful about how they underwrite these investments. And I think where it all kind of falls apart is because there is not an appreciation for the risk that investors take. It's a big risk. This is a lot of money. And the return is minimal. We're literally talking about 3 to 4% yields on investment. That's not very good.
Why not buy a GIC and sit back?
This is the thing. So these are not very profitable investments. This is an investment into the future, and we should embrace these investors because they are literally the ones that are supporting the housing stock, as opposed to demonizing them and somehow suggesting that the financialization of real estate is bad. When people say that, I kind of recognize how naive they are about how the world works. You almost can't respond to it because it's just oblivious.
It seems to me that instead of focusing on the real issue, which is the supply side of the equation, every time they're trying to justify another bad policy, they're picking another boogeyman. It used to be foreign buyers coming in. Even before the foreign buyers tax, there were no foreign buyers, virtually none in the multifamily space, at least rental housing. We did a survey for the Globe and Mail a few years ago. We went back to our last 200 transactions. There were 2 foreign buyers, one from the United States, one from Austria. And it doesn't matter how many times I say, we don't have a foreign buyer problem. That's not what's causing this problem. And I recently interviewed a broker from Manhattan, Bob Knackle. He's one of the top commercial brokers. And he talked about they have the similar problems in New York. It's a perfect case study of what not to do with vacancy control and vilification of owners and all the impediments. He said that during COVID, it was like the perfect controlled experiment where you had all these people move out during COVID. And in a sense, it increases supply literally overnight. So all things being equal, what happens if you jack up the supply immediately? Well, that was a perfect controlled experiment, COVID. A lot of people left and rents dropped 30%. 30. He was saying that no policy and no change had ever decreased rents more than 10%, yet increasing the supply overnight dropped 30%. Yet all these pundits and self-proclaimed economists and armchair economists are suggesting, no, 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 it's not the supply. That's not going to be the problem. And they start pointing to all the boogeymans. It's the greedy developer. They're charging too much. Why do you think this has happened? Like, what happened to the law of economics? Is it because we consume information differently on social media where there's a 30-second clip, and if your algorithm is set to a certain, you're just going to get the self-fulfilling prophecy of like, I don't get it.
Yeah. Misinformation is a weapon and it's being used that way. So it's unfortunate that that is what is happening. The housing situation is a result of constrained supply, but that is directly a result of government thinking that they know better. They tell us how to build, where to build, what to build. We're the ones taking the risk. Why don't you let us make those decisions? And if we get it wrong, that's too bad. We lose money, right? It's that we know best mentality that has, at the end of the day, put us where we are today.
When you're looking at projects, we have the Broadway plan, which is more of a mature plan now compared to others. It's been around for a few years now, a couple of years, I think, since the draft plan was rubber stamped. Is that?
That's about right.
About right. One of the biggest items that makes the project viable or unviable is the tenant relocation program. And I think both of us can agree that we're all for a balanced approach so that people aren't thrown out in the streets and they don't lose their home and they have options, for sure. But we've been told that we have the strongest tenant protection policies probably in North America. And in many cases, the amount of money or the rules and regulations and the policy of how the mechanics work make the development unfeasible. And I'm just wondering, like, what do you think could be done that would be a balanced approach in order to move the needle so that these properties can be redeveloped and we can have healthy housing stock instead of it just sitting there? These old crummy buildings where you have a big site with 10 units when you could have 50, 60, 70 rental units.
Yeah. It's the biggest challenge for us. And I don't have a solution, to be honest with you. If it is the landlord's responsibility or the developer's responsibility to maintain social housing, which in other words is housing that cannot support itself, it can't be fixed that way. The private sector cannot be held responsible for social housing. If you say, okay, private sector, you have to build, maintain, and operate housing that you're guaranteed to lose money at, the private sector just won't do it. And saying, oh, you only have to do that on 20% of the building, that's not attractive either, because that 20% will make the rest of the building not feasible 5 years down the road. So that is really the fundamental problem, is that if you tell us that we have to invest in something that is bound to lose money, we just won't do it. And I think that's what you're seeing. You're seeing, very little is getting built, very little is getting started. There's a lot of approvals, a lot of applications being processed, but so long as a component of the building is always going to be an anchor, you will not find the investors that are going to put in hundreds of millions of dollars into these buildings that will think that's a good idea for a measly 3% return, which is really only going to get smaller because that social housing component is always going to make the deal worse.
So do you think this could evolve where the government starts to increase their footprint in the industry and try to become the builder, the developer, and house these people? I mean, look at the Rental Protection Fund, for example. $500 million. I've been critical of it, not because I don't think tenants should be protected, but because it's probably the most inefficient program out there to really help. You're actually not building rental stock. You are removing stock from the open market into a segment where if you're one of the lucky few tenants that happens to be living in there, you're protected. A lot of those tenants don't need to be saved. They're making great salaries and they'd move out if they had options to move out. So it's not a very elegant way to help people because it's this shotgun approach. Oh, we'll just buy this building and look, we saved you. Well, first of all, now you've just removed affordable, quote unquote, rental stock. You've moved it to a different segment. Nothing new has been built. one could argue that you've just created more scarcity and rental rates are going to go up. And then on top of that, so that's the province trying to save. And then the province has another program. Well, the TOA, the province is trying to force the municipality's hand to build because politics reigns supreme. They can't get anything done. So the province is saying, no, you have to build this minimum height, this minimum density. You municipality figure it out, all the details, but you got to build. So you have two provincial programs that are in conflict with each other because there was one site out in Coquitlam that was purchased that was ripe for redevelopment, a massive high-rise tower. And they went and I think it's roughly like $170,000 per person. If you just look at it, of what that's costing, surely there's got to be a better way to create affordability and to help these people.
The rental protection fund, it has its flaws for sure. But I think the one thing that it does, yes, it grows essentially the social housing pool, and it does it instantly.
Mm-hmm.
And I think that's where it wins. Where I think it fails in that, like you said, it is taking affordable rental housing out of the rental housing stock. And now the obligation to maintain these buildings is now put onto the private housing provider.
So what happens when they're servicing a mortgage? As new tenants come in, they're subsidizing their rents. They're not increasing the rents. The target for these buildings were buildings that were underperforming. And the irony is that in many cases, they're overpaying for these underperforming buildings. And then they're keeping the status quo. Yet they got to replace the roof, the elevator, the windows. And then they have to service a mortgage, which, once it matures, who knows where the rates are going to be. So then what happens? Do we dig deeper and tax our way out of this problem? Like, what's the end game? Like, I've heard that they're going to start increasing the budget and try to do more of this. So what's happening is our government moving more into the housing sector, and what are the long-term ramifications?
Yeah, I would tend to say that yes, the government should be the social housing provider, and I mean they're taking a bit of a shortcut by just buying these existing affordable rental housing stock to get there, because building it is actually too expensive. But that's just what we are as the private sector is facing, is building it is too expensive. So government is taking the approach of, we're just going to buy the existing housing stock because the replacement cost is way too high. And yes, that is going to come with long-term maintenance obligations, which would be the case anyways. And so there's going to be long-term funding that is going to be required to maintain these buildings and maintain their affordability.
Another topic I want to touch upon is the TOA, Transit-Oriented Area Initiative, which we briefly chatted about. It is the province literally taking control and telling the cities that you have to build. And there's been a lot of chaos with it because they set the minimum density and heights, and they ask the city to come up with the details of what development should look like. And there's many things that need to be addressed. What are the frontage requirements? Is there a pace of change? What is the tenure? Is it rental? Is it condo? What's the affordability component? The list goes on. And all those details make or break a deal. Vancouver seemed to be the first out of the gate because they had a nice template, the Broadway plan, which set everything up, and they've kind of mimicked that. You had Burnaby pushing back until recently, and then you have other jurisdictions who are saying, yeah, we've designated it, but we don't have the details. So what do you think of this program or this initiative? Does it have any teeth? How do you think it's going to get sorted out? And is now the whole city going to be a construction site? Like, if there's all the supply, what do you think is going to happen to values? A lot of questions there.
Yeah, there's a lot there for sure. But I can tell you that when the province first came out with the TOA policy, I was pleasantly surprised and thinking, wow, this is a powerful move. And then all the benefit got negated because the municipalities were allowed to condition that density. So they were, all of a sudden, okay, yes, you can do 4 FSR, but yes, a large percentage of it has to be non-market housing or below market housing. Okay, well, we didn't gain anything. So it's not like we have made projects or properties more developable. We have kind of established a density potential, but we haven't done anything beyond that. And I tell people, like, my house right now, I can build a 12-story building on it. It's ridiculous, but I could.
You'd have to assemble with your neighbors.
Yeah, but it wouldn't be economical.
Mm-hmm.
So what's the point?
Mm-hmm.
So the We haven't solved the economics. What we have said is, okay, now all these areas can have these building forms. That's all we've done at the end of the day. And the municipalities have to come to the table and work with the industry to come up with a formula that allows these projects to get built. But I don't see that happening anytime soon. So I don't think we have to worry about construction sites everywhere because it's.
Do you
it's not
think we
economic.
need like an ombudsman or somebody to like navigate all the different departments? Because it seems like everyone's pulling in different directions. You have City Hall, you have the planning department. Often there's a conflict between council and planning. Then you have the province, and you have those rules and regulations and different taxes. And when they're creating these policies, sometimes they don't sync and there's conflict. Like if one of the biggest challenges is the timeline for entitlement or navigating the process, would it be worth having like an efficiency czar, kind of like Elon Musk, his new role south of the border, where they're just going to just focus on creating efficiencies? Like if we could wave a magic wand, what would be like the best decision or the best impact, whether we're adding something or taking away, to create, number one, to incentivize developers, but also to make it a little easier to build? Because just to get to the point where you can start digging is a multi-year process and very expensive.
I think when the municipalities recognize, we are in an impasse, that we're actually not going to be building. And they have to accept that. I think to this point, there's still some denial of that. But when that happens, you will see change. In fact, it happened once back in 2008. When we had the financial crisis, I remember the city of Vancouver brought in the short-term, it was STIR, it was short-term incentives for rental housing.
Yeah.
And together with that, they appointed an advocate for each project. And that advocate basically took your project through all the various departments and basically rammed it through and got it approved because the political will was there to make it happen. And we were able to build efficient, cost-effective buildings. And we did a bunch of those. And then the program ended. And the program ended because it was too successful. I think the city of Vancouver managed to get 5,000 rental housing units built under that program. And they thought that was enough at the time. Well, it felt way short of kind of meeting the demand that we have in this market. But it can be done. And, we have historical evidence that it can be done. So, yes, maybe it's not an ombudsman, but the projects need champions that can steer them through the city process, because otherwise they just get stuck.
Okay, so Hani, 2025, what do you think the big themes will be moving forward? Do you see that we're still in this challenging time with the economy? Do you think interest rates are going to stay kind of level? Have we stabilized? Is it just going to be business as usual? What opportunities? Like, what is your gut instinct for 2025? What are the opportunities?
I think 2025 in general is going to be the beginning of a turnaround. We're seeing things trend better. We're seeing the politicians start to recognize that we do have challenges. We're going to have a change in government federally. That's bound to happen now. And I want to be optimistic as to what's going to happen. But the changes have to be dramatic. We can't just work around the edges here. There's some structural issues that have to get fixed. So it will take some bravery to do that. But we are starting to bend the ears of the people that can affect some of this change. If we're successful, then there's going to be opportunity going forward.
And you could buy some of my sites again.
Let's hope so.
We've got a lot of product. Well, thank you very much, Hani, for coming on the show. It's always enlightening. You have a perspective that very few people in the city have, and it's an honor to hear you speak and to give us your insights. So thank you very much.
Thank you.
Thanks.
Pleasure.
Thanks for tuning in to the Goodman Report podcast. If you enjoyed the show, be sure to follow us on your favorite podcast platform. Give us a 5-star rating and leave a review. And don't forget to sign up for our newsletter at goodmanreport.com for the latest listings, market research, statistics, and industry news. Follow us on X and Instagram at Goodman Report, on Facebook at Goodman Commercial, and on LinkedIn under my name, Mark Goodman. On behalf of the entire Goodman team, thank you for listening, and we'll catch you next time. This podcast is produced by Podfather Creative.